Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 19th, 2022, and I'm coming to you for the second time for the Tuesday live stream. Welcome one and all. Just give me 1 second and we're going to get started. Apologies for starting a little later than usual. Some stuff came up last minute, but we're here. We are here. Let's jump in on the smaller time frames really quickly just to see what's going on. It's not half bad, not great, not half bad. Right, stuff's moving in the general direction that we want it or expect it to go. It's never bad. That's where we were in this morning, right here, this white line, right? I was saying how this resistance was likely to be broken, and we did break it, and so we're headed up. And I was also saying how we likely make a pit stop at 24K, right? Right here, let's see. On the daily. So daily right here. Yep. So pit stop right here. Right at this EMA, this 55 EMA is exactly, more or less where we got rejected, right? And so I think we're gonna consolidate a bit here, and then this is our real target, this 144 EMA. Yeah, so that's the small time frame analysis. Really nothing's changed, right? And guys, let me double check that the stream is working correctly. Let's see. Definitely let me know if you're here. Like the stream on your way in. Let me know who's here and what's up. Alright, cool. Looks like we're streaming. And okay, so yeah, short time frame analysis. Just like we said, this is likely, very, very likely, to hit 30K. This is likely to be our target on the upside. We just broke this resistance, so I mean, it's unlikely that we fake out and come back down here. It's a significant break of resistance here, and we tested it once, twice, 3 times, broke it. This 55 EMA is not going to be a major rejection. Doesn't look like it. On the small time frames, the Elliott waves don't tell us that, right? The EMAs on the larger time frames don't tell us that. Very likely to fill this gap, right? Turn on the VPVR right here, turn on, you see that there's a huge gap here. There's very little buying and selling done here. So once this 24K breaks, I expect us to run up with relative velocity, right? With a good amount of speed, come up here, okay? And I think all of that is going to take another 7, 8, 9 days, right? Reason being, we're likely to hit this target close to the new moon, okay, when we can expect this rally to kind of start cooling off. But I don't think it's going to be a major cool off, like, a huge rejection. Where's my pen? I don't think we're going to do anything like this right here, right? I feel like it's going to be more of a consolidation and then continuation, something like that. So that's the small time frame scenario, but that's not why you're here, right? That is not why you're here. You're here because you're messy and you like clickbait and you like big numbers. It's not clickbait though. I promise it's not clickbait. And I'm going to tell you why it's not clickbait. I'm not into clickbait. I don't do this for the views. I don't do this for the likes. I don't give a damn. I get paid by the market. I'm a professional. I don't get any YouTube checks. The market pays me fine, and I love it that way. I don't give a damn what anybody thinks about my analysis, or if they don't like it. I'm not trying to curry favor from any audience. I just share my analysis because I have a passion for doing analysis, and I guess sharing it makes it, I don't know, it just works. You know, when I share it with you, sometimes I get more insight. Sometimes I see things that I didn't see when I'm just, talking to myself or in my own head. Yeah, it's not clickbait. I don't need clickbait, right? As long as I can pay my mortgage, my bills, finance my lifestyle, be my own boss. Like, trading's really done everything for me, and I don't need anything else, right? Can take care of my family, can take care of myself, can give back to my community. I can't express how thankful I am for everything that trading has allowed me to do, right? Not having to dust off my resume and all that shit. I don't need all of it or any of it. Okay, let's go back to what you're really here for. Okay, and let's go into this major time frame, this weekly time frame. Turn off our EMAs because we want to clean up our charts. Okay, and look at this weekly candle. Look at that. You see that right there? That's a nice weekly candle. For all that red, for all that nasty negative price action, this weekly candle is awesome. Look at that. Look at that right there. That is a nice weekly candle. Okay? And I expect that to continue. Right? I don't see this tailing off. And if you look back, I mean, if you want to go into a higher time frame, look at this monthly candle. This is the first green monthly candle we've had since March. So I mean, like, yeah, that looks really nice. That looks really, really nice. Okay, let's go back on the weekly time frame. Okay, and let's talk about this $1.7 million price prediction. Oh, how crazy. A $1.7 million price prediction. Like, just as people say this is crazy and way too bullish, they said the same thing about $10,000 when Bitcoin was at $300. They said the same thing about $30,000 when it was at, $10,000. They said the same thing about $60,000 when it was at $30,000. There's no way, right? Yeah, there is a way, right? And this has nothing to do with fundamentals. This has nothing to do with like how much money is out there, all that stuff. I'm strictly reading the charts. If you're subscribed to this channel, hey Usman, what's up? If you're subscribed to this channel, you'll know that I don't look at fundamentals mostly, right? But some way, somehow, good technical analysis is sort of in sync with fundamental analysis. So somebody said on Twitter, I don't know if this is true, that remember I said the 28th is the next new moon, right? And we expect us to hit that $30,000 resistance on the next new moon. Somebody said that something about the Fed was going to be announcing something on the 23rd or something like that. That doesn't surprise me. I continually see stuff like that where, okay, the charts are saying this, my analysis is saying this, but on the other side of things, there's also some fundamental analysis that corroborates this. But again, I don't know if that's just a hindsight kind of. There's always fundamental analysis to corroborate technical analysis. That whole thing, show me the charts, I'll tell you the news. I don't know if it's that, but again, I'm only looking at the chart. So just looking at this charts, I'm going to show you why this $1.7 million Bitcoin prediction, I like to call it a projection, okay? This is not a prediction. I don't know. Okay, I'll say that outright. I don't fucking know. I'm literally just using these tools that are probability based. It's all based off probability. It gives me an edge. It's paid my mortgage until now. It's paid my car payment until now. It's allowed me to live without a real, quote unquote, real job up until now. I don't get YouTube checks. I get paid by the market. And I've accumulated a lot of crypto down here because I was reading that, okay, it looks like we're going to go up. And thus far, it's doing, my positions are doing quite well, right? I don't brag about my positions on Twitter because I don't care to, right? I just want to say that this $1.7 million Bitcoin is consistent with everything else that I'm reading, okay? And I will also say that the time that we would hit that is also in line with some greater fundamental features or greater fundamental events. And I'm going to talk about that, okay? I'm going to talk about that. So let's first go in, because I'm not going to assume that anybody knows anything about Elliott wave theory. I think one thing that, because I do this every day, I see it every day, I think about it, I dream about it, but I wrongly assume that people just know ratio analysis, like basic fundamental Fibonacci ratio analysis, and how it relates to Elliott wave advances. That's not smart on my behalf, because not everybody knows that. Even people that are subscribed to the channel and they watch a lot, I don't know if they really do, but apparently they don't seem to know much of this. So I'm just going to go over that first. Then we're going to apply that to the chart, okay? We're going to apply that to the chart, and then the 1.7 million will make sense, and you'll see that why that's actually a conservative figure, all right? So this text, Elliott wave principle, key to market behavior, is the guide, the de facto manual on Elliott wave theory, okay? This is written by AJ Frost and Robert Prechter, okay? Very famous Elliottian, Robert Prechter, AJ Frost as well. And this chapter 4 is where you want to read about ratio analysis and Fibonacci time sequences. It's quite pithy. It's for the, I think this is more advanced, and it's not for beginners. If this was the first manual I read, I don't know if I would still be doing Elliott wave, because it's just not very straightforward, because he really goes into detail, okay? And so in this chapter, you can see exactly all the ratios that I've been discussing. Like, for instance, here, you can see how I always say if you get a truncated third wave, you can project your fifth wave using your first through three waves, right? First through three waves is 1, and then the fifth wave projection is 1618. Essentially, every projection that we use is based and calculated around one figure, the golden mean, the phi ratio, 618, or its inverse, 1618. Okay, that's it. And then everything else is just a derivation of that. And you can see that right here. He just shows that really elegantly, but it's not as straightforward. You kind of have to know your math to make sense of this, or just know your ratios, right? So what I like to do, especially for beginners, is to refer them to Elliott Waves Made Simple by Steve Sinclair. And I think that is much more palatable, much more accessible for a beginner. I think this is the book for beginners in Elliott Wave, okay? Once you get this book and you're really straight and everything is clear here, it's not perfect. There's some issues. There's some small, minor issues, okay? But it's more or less really, really good. And if you get this and you understand it, then please do move on to Prechter and Frost, because it'll take you to another level. Okay, so here, what I want to show you is, I'm not trying to sell this book or anything. I just want to show you this one thing. Here, Wave 3 Fibonacci levels, Wave 3 usually ends between 1618 and 2 of wave 1, minimum 1. Okay? Again, 161.8 and 200%, basically, it's in ratios would be 1.618 and 2, right? That I talk ratios, he's talking percentages, same difference, right? So this is what we're focusing on, right? Do you see that Fibonacci level? I'm not just pulling this out of my ass. I'm not just making it up, okay? Now that we have the theory down, let's go back to our charts. Guys, if you're getting value, please like, share, and subscribe. Let me know if I'm making sense or if something's not right or whatever, or, let me know what you think about this. Usman says, what about big dump? Can't we see in coming days? Usman, I don't see that, but we can talk more about that in a moment. Let me get through the topic at hand. Okay, and so how do we get 1.7? Very simply, right? Remember, wave 3 is typically, so you take our Fibonacci extension tool, right? Let's see, it's trend-based fib extension or Fibonacci extension tool. It's right in the tools here, all right? And we take this minor wave 1, okay? Any wave 1. You can do this with any wave 1, but we're taking this minor wave 1 because I'm saying, and it seems as if this is true, this was an impulsive wave and this was a corrective wave, and this wave 2 correction right here that we're seeing, that we're in and we're coming out of, is meant to be projected on average, again, on average, to the 1618, between the 1618 and the 2. Do you see that? The 1618 right here is at 1.61, okay? But if I'm really careful about it and I use my magnet, it shows me 1.67. Do you see that? That's how I got 1.7. So once 1.67, and then the 2 is at actually what is that? 4.9 million. Okay, so that's your 1618 and 2. Again, we saw, based off of Steve Sinclair's what Steve Sinclair says and what Bob Prechter says, what people who study Elliott wave say, that the minimum projection for wave 3 is the 1 Fibonacci extension. And what does that mean? That basically means 100% of this. So the minimum would be $294,000, right? That's the 1 Fibonacci extension. This is the minimum projection for this wave 3, but we're saying on the balance of probability, expect it to go to 1.67. That's where I got 1.7 mil. Okay, and it can go all the way up to 2. Just balance of probability. Obviously, we know any waves, any wave 1, wave 3, wave 5, if you're in an impulse, can be extended. So it could go all the way to the 4, 2, 3, 6, right? But like balance of probability, again, we're looking at probabilities, not certainties. The likelihood that it hits 1.7 is high. And again, why is that a conservative figure? It's because that's the 1618. I'm not even talking about the 2 or any extensions thereof. Do you see what I mean? That's the phi ratio. That's really simple right there. So that 1.7 would represent a 6,310% run, okay? And I don't understand why people are so kind of surprised by this, because 6,000% for Bitcoin is not out of the ordinary, where wave 1 that we got when we were at $3,000 or $4,000, say $4,000 at the bottom of wave 1, we did 1,300%, okay? We did 1,300%, but then sorry. Yeah, that was wave 1. That was wave 1 of this minor that was wave 1 of this minor advance. But if you look at this intermediate advance, this green right here, right? This wave 1 was a proper 12,000%. Do you see what I mean? So like, it's not even the biggest, it wouldn't even be the largest advance, the largest impulse we've had in Bitcoin's history. Like 6,000% is cool. It's great. Don't get me wrong, but it's not like earth shattering. We've done better in Bitcoin bull runs. Okay, and let me not assume that you guys know what all of this is. I'm sorry. I'm making assumptions. Sometimes it's hard for me to remember what I'm not explaining. So definitely call me out on that if something doesn't make sense. But here we're looking at a bunch of different lines in a bunch of different colors. And I've made the pink line thicker because this is the current wave degree that we're in, okay? This is the minor wave, okay? In Elliott wave theory, we count waves, okay? Progressions in advances, okay? 3 steps forward, 2 steps back, meaning every 5-wave advance, every advance, every impulse happens in 5 waves. And wave 1, 3, and 5 are always positive or impulsive. They can be up or down, but they're impulsive. Waves 2 and 4 are corrective. They're negative, okay? And so 3 steps forward, 2 steps back. That's that whole idea. And the different colors, I'm basically showing the different degrees because Elliott wave theory says that it's all fractal, meaning it's time frame agnostic. You can break every single wave down, and every time you break a single wave, you'll find 5 waves in it. So in this one wave 1, this minor degree wave 1, you'll find 5 waves. If I break down this minor, or what would that be? Minute or minute? I think it's minute. If I break down this minute wave, minute wave 1, you can find 5 waves in it. Okay, and what do I mean by minor and minute and intermediate and primary? I'm basically talking about degrees. So we name degrees in Elliott waves. So let me show you really quickly. So if you go, you can see there are super millennium waves and sub-millennium waves and cycle waves and primary waves, intermediate waves, minor waves. It's basically the size of the waves, the size of the Russian doll, if you will. Okay, so I hope that makes sense. So this pink is essentially the wave that we're in. We call that a minor wave, right? If you count everything. And the reason that this is a minor wave, because I've got this blue being the cycle wave, this red being the primary wave, this green being the intermediate wave, and now we're in the minor wave. So minor wave 3 projects on average to 1.7 million, okay? And it's actually between 1.7 and 4.9 million, balance of probability, okay? And that's how I get my $1.7 million Bitcoin. Now, I also said in that controversial daily Bitcoin update that I was looking at this bull run to last 4 to 7 months. Okay, and why did I say that? Let's go into time. Not everybody knows this, and let me just pause and see if there are any questions. I don't want to lose anybody. Let's see. Okay, so let's go into time. Now, not a lot of people know that there is a time component to these ratios, right? We like to do price projections and price ratios, but that's not the only axis. It all happens on 2 axes, right? Here, there's time, right? And here's price. That's price, and this is time. And so just logically, it wouldn't make sense that this respected certain patterns and this didn't, right? They're one and the same. You can't get these projections, you can't get any of these patterns without working on the canvas of time, if you will. Okay? So there are indeed patterns, just like we see patterns in price, there are indeed patterns in time. And you can learn to project those to a high degree of probability just as well. And so that's also why I want to talk about how long this may take. It's not enough always to say, oh, Bitcoin's going to this figure. Yeah, eventually, sure. it's an appreciating asset. It seems to work well. It seems to be on an uptrend long term, right? But then when now we can use our skills in time projection to give us some answers. And again, all probabilistic. If you really understand that, and you're not just saying that, really understand that, you will trade like it, okay? You will use risk management like it's all probability. Very, very, very few instances where you're 100% sure something's going to happen. You can be 90% sure, you can be 95% sure, or, it's not a question of ascribing some percentage to it, but you give yourself enough of an edge, enough times, you're going to win. You're going to be able to pay your mortgage, your car note, and whatever, okay? So that's the idea. Don't forget that. Now, looking at time, you'd have to go into more advanced manuals. Elliott Waves Made Simple by Steve Sinclair doesn't deal with the time component, okay? That's more of an advanced thing, although I feel like it shouldn't be, because price and time are almost equals, right? Because they're just two sides of the same graph, right? It's one axis is price, another axis is time, all right? So here we have, remember, this chapter 4 is called Ratio Analysis and Fibonacci Time Sequences. So in this case, and it is a little more involved, so I'm going to try to keep it simple. You can see here Prechter and Frost, okay, and this is the 13th edition. This is not a fly-by-night manual. This is something that they've been writing and revising and writing over and over and over again. You can see they discuss when certain waves hit, right? And you can even see letters. I mean, if you're really interested in this stuff, I highly recommend this book, Elliott Wave Principle, Key to Market Behaviors. Again, it is a little bit advanced, but if you're really into it, I think you can do it. It shows how it's possible with these Fibonacci ratios to project time. And so you can see that this was done by Ralph Nelson Elliott himself, okay? And they talk about this here. There is no sure way of using the time factor by itself in forecasting. Elliott said that the time factor often conforms to the pattern. For instance, with regard to trend channels, and therein lies its primary significance. Okay, remember that, trend channels. Frequently, however, durations and time relationships themselves reflect Fibonacci measurements. Remember that as well. Exploring Fibonacci numbers of time units appear to go beyond an exercise in numerology, fitting wave spans with remarkable accuracy. They serve to give the analyst added perspective by indicating possible times for a turn, especially if they coincide with price targets and wave counts. All right? So keep all that in mind. They tend to conform to the pattern, meaning trend channels. They also reflect Fibonacci measurements, and they offer this whole thing is remarkably accurate, okay? So let's go back into our charts. Guys, if you're getting value, please like, share, and subscribe. Definitely don't know anybody else talking about this stuff. Very few, even amongst us Elliotticians, all right? So I said 1.7 million. You got how I got 1.7 million. And again, that's a conservative estimate. Now we have to change our tool to do the time analysis, all right? And we're going to do this in two ways. The first way, we're going to do it the simplest way. And you see this channel right here? That's the simplest way to do it. Elliotticians like to channel their waves, okay? Wave channeling isn't an exact science. But I'm going to zoom out for a second and just going to show you this. Do you see a trend, all right? This is Bitcoin since its inception, right? This is the index, meaning this is all of Bitcoin's price action since the beginning. Do you see any kind of trend, right? Up and to the right, as people will say, up and to the right, okay? And it actually tends to curve slightly, right? and it has a slight parabolic shape. There's a reason for that. There's a mathematical reason for that. One, don't forget, this chart is being represented on the logarithmic scale. Okay, I cannot represent price action from 0 to $60,000. I can't do that accurately using an arithmetic scale. All right, it's on the logarithmic scale. So remember, what does the logarithmic scale mean? It means that the higher you go, the smaller the difference, the sort of the space between the different the smaller the space between the values on this axis. Okay, so the higher I go, the smaller the space, and that's the only way we can fit this, or else it wouldn't fit on one chart. Do you guys get that? Okay, that's kind of why you see that slight parabolic pen. Okay, and the second thing is, generally speaking, even with the sort of inaccuracies or like imperfections of trying to represent all this price action on one chart, you can see more or less that price action for Bitcoin kind of fits within a channel. Okay, and this is something Elliottians have found, and this is why we channel our wave counts. Okay, and again, you haven't really seen much more past this point. Okay, but still, you have all of this price action within the confines of this sort of diagonal channel, right? So that idea remains in this small advance, in this minor wave count. Again, I'm focusing on the pink wave because that is where we're at. Okay, so now let's zoom into the pink wave. And I think this is very straightforward, right? Like, it's almost undeniable that this was an impulse right here, right? This was a 5-wave impulse. Even if you don't know Elliott wave theory, like, price went up and up and up and up and up and up, right? During this time, right? Bitcoin was at 3,800, went all the way up to $60,000 in the span of a year, 385 days, okay? More or less. So if that happened, right? Bitcoin went from $3,800 to $60,000 in a calendar year, more or less, then we can expect that to be impulsive price action. That is exactly what we mean by impulsive price action. And right after that, what did we get? 5 waves up, 3 waves down. That's Elliott wave theory, right? That's a whole cycle. You got your cycle down, right? You got more or less the same. Actually, let's go and be more specific, right? So there's a principle or a guideline of equality. I like to call it the guideline of proportionality in Elliott wave theory. And it states that in a 5-wave advance, you will typically have 2 of those 5 waves be equal in price and in time. And that equality that's why I don't like the word equality. I think proportional in price and in time. The proportions are as follows. The first wave will typically be your advanced, your impulse, right? And your second wave will typically have a sharp correction down to between the 0.5 and the 618 in the golden ratio right here. So you hit almost your 0.5 here, 15K, right? You almost came down to 15K. So that's the proportion in price. And then in time, and you usually see this in waves 1 and 2. That's why I'm kind of bringing it up. In time, you should see that the time it took you to form wave 1 is typically, so 385 days, the same time, more or less, it takes you to complete wave 2. 427 days, okay? More or less, proportionality, 1-to-1-ish, okay? So this is why I think that this is very likely to be, it looks like it, and smells like it, walks like it, talks like it. This is a wave 1 and wave 2. You do your wave 3 projection, and if you do indeed have a wave 1 and wave 2, you can start channeling. And how do you channel? You take the top of wave 1, okay, and you assume that wave 3 is going to end up somewhere, You take the bottom of wave 2. Typically, you can't really have high probability channel until you print at least wave 3 or wave 4. Channeling's best used for projecting wave 5. But just taking a regular run-of-the-mill channel, from these tools here and drawing it from wave 1 and wave 2, you can make a loose prediction, a loose projection of wave 3. Again, this isn't high probability because you typically need 3 touch points, and here we only have 2. So we want a third, but let's just say this third is over here. It falls right within, you see what I mean? There are 2 things. I took the Fibonacci extension tool from the bottom of wave 1, top of wave 1, retracement of wave 2, and that just so happens to be the top of my channel. Do you see that? That's confluence, my friends. That's confluence. So there's two things, again, that are independent of one another. The channel's not like conforming to anything. It just so happens that the top of the channel is right at the 1618 of this wave 1, retracement of wave 2. Okay, so that tells me that this is more than likely. Okay, now there's something called a throw over, meaning you break your channel quite a bit and then you come back in. That's also possible, but these are just rough projections. Okay, another thing I want to show you related to time is that if this is wave 3, wave 4 is likely to come back down to the bottom of the channel, right? And hit it somewhere during the bottom of the channel. Now, I did this, and you don't know if I'm telling the truth or not, but there's no reason to lie. I did this in the following way. Hear me out. I put this channel up, and I was like, I wonder what will happen if I channel this. I typically don't channel until I have 3 touch points, okay? But I channeled it anyway, and I was like, 1.618 for wave 3. Where does wave 4 hit? Let me just guesstimate. Wave 4 hits here-ish, okay? At the bottom of the trend, around here, okay? And that would kind of be typical of a wave 4 correction retracement, right? Between the 236 and the 382 of your wave 3, right? And right here you have it. That wave 4 would end right between the 236 and 382, almost exactly in between the 236 and the 382, okay? So I mean, this is, and so I was like, I wonder what date that coincides with. April of 2024. And I was just thinking, I wonder if there's some significance to April of 2024. So I looked, and look what I found. The next Bitcoin halving is on April 4th of 2024. Okay, I know what you're thinking. Dean, that's crazy. I don't believe it. This Elliott wave stuff is all based on math. It's all based on natural science. Stuff that you see every day. The waning and the movement of winds and Bernoulli patterns and the shriveling of a leaf. The proportions of a snail shell or of a seashell. Like, it's wild. Wave motions, the tide, measuring tides and waves in the ocean. Seasons, planetary motions, right? Why wouldn't it be able to give us decent, reliable projections on price and time? That is the Bitcoin halving. And what happens at the Bitcoin halving? Typically, that is a fundamental event that creates strong buying pressure. Okay, because it literally cuts it cuts the supply in half. Okay, and some people say, well, it's all baked in. It's people know it's coming, so they don't really care. But it still has an effect, and it has had an effect historically. So this is wild to me, and this is again why I don't really care about any fundamental things. If I do my analysis properly in technical analysis, I've seen just in my experience, that it just works out. Okay, what do you guys think about that? Is that crazy? How nuts is that? What do you guys think? I want to know, right? You guys think I got a tinfoil hat on? No. I know you're because you're here, so you probably don't think that. So that's my time prediction or time projection, and that's my my price projection. And we never gave a time projection. So the top of this channel for wave 3 is January of 2023. Okay, right here. But again, you can get a throwover, which takes you into February. And during that live stream, or not live stream, during that daily Bitcoin update, I said that I thought we should get a top in like 7 months, which would be February, right? Because we're in July. Yeah, we're in July, and that would be February. But this top right here, the top of this channel is in January, literally January of 2023. So that is simply, we're in late July. That's 4 months from now. So that's why I said 4 to 7 months, because we could get a throwover. So that's why I'm saying in the next 4 months, 4 to 7 months, I'm not surprised. I would not be surprised if Bitcoin does 6,300%, goes to 1.7 million. So that's my analysis. What do you guys think? I haven't done the math, Wesley. Wesley says, what would that mean in terms of market cap? I have no clue. I don't even look at market cap, really. I look at it sometimes, but I don't look at it much. Again, that a lot of people do that, and I'm not saying it's wrong or anything. I don't really care how much money it would take, or, because people always make the argument, well, if Bitcoin were to go to that price, then the market cap would have to be at least this, and there's not enough money in the world. I don't even think about that kind of stuff. It just is what it is, right? Whatever the charts are saying, that's what I do. And thus far, it's worked out. I bought like a madman. I sold my motorcycle. I did a lot of drastic shit in the past few weeks, just buying this bottom because I recognized it as a bottom technically. I got faked out here. I'm not gonna lie, people who are subscribed to the channel know I got faked out right here because I thought this was a bottom, but then I started dollar cost averaging more into positions as it went down, and some positions I bought completely at the bottom here, and they're doing well. And even the ones that I bought up here, I'm fine because I'm not down that much. And based off of where we're going for those altcoins, I'm not even sweating it. You know what I mean? But it's just it's amazing what good technical analysis can do. And I think a lot of people got faked out by this double zigzag, and I think I finally am resolved on what this was. It was a double zigzag. That's why everybody got so fucked up on it, because it's a WXY WXY. It's a double zigzag, and typically the double zigzag goes to, you have the zigzag doing let's see, you typically see this go to the 1 Fibonacci extension, or 1 2 3 6. It was 786. It was hitting, it was like 1 to 0786 in both cases. This was 0786 of this, and then this was 0786 of that. So it threw a lot of people off, and it was a great learning experience for me. I'm fine with it because I didn't realize any losses, and I've just been dollar cost averaging like a madman. So yeah, that's pretty much it. What do you guys think? What questions you guys have? Oh, Usman says, what about big dump? Can't we see in coming days? I don't really see that. Do you mean a big dump on the small time frames? Like, for me, we're in a proper uptrend. I mean, look at this. Whoops. Look at this volume. Look at this volume. Okay? Some people, remember, in the first Elliott wave of a trend, of an advance, of an impulse, most market participants do not buy into the new trend. Most people, let me tell you something. Technically speaking, or fundamentally speaking, I should say, right? Because looking at the fundamentals of Elliott waves, most people, I'm going to daily time frame. I'm all messed up with how I'm looking at this. Most people won't really pay attention until we hit, I would say, all-time high or thereabouts. People will still say this is a scam pump or it's a fake out until you hit some significant marker, either all-time high or you retrace and then you keep going, which would represent a smaller degree third wave. That's just how it is. Very few people, only the professionals, can read reversals because those are exceedingly challenging, and then the ensuing first wave, and that's normal. So what you're gonna see, just on social media, and most opinions are going to be like, oh, that wasn't a proper reversal. They're looking for lower targets. Most people are not going to be convinced, and that's fine. And it's sometimes not a bad idea because that's a strategy in and of itself. It's not bad to be late to the party when you're trading sometimes, if it's a big trend, right? Rather than be too early. You want to be late. You want to get quote unquote confirmation. But for me as a trader, there's no such thing as confirmation because there's never 100%. Only thing that's 100% is when I'm looking in the past and I can read the wave, and it's finished, and I'm like, oh, okay, that was this, that was that. But if I'm trading, there's always risk involved, and I never know 100% for sure, and I'm okay with that. I'm okay with that uncertainty. Usman, I am not expecting a big dump. Like I've said for the past few days, I'm expecting Bitcoin to go to 30K and hit that at least by the 28th, which represents the next new moon. Okay, and I know it sounds crazy, but like moon cycles are a thing. They're statistical data to prove that they are reliable indicators of big buying and big selling events. So I'm expecting for us to find significant resistance on the 28th by the time we hit 30,000. And I've shown, for the past few days, I've been talking about why 30,000 is a serious target. And then I'm still not sure what that retracement looks like. I don't know that it's going to be a major retracement because if you think about it, right, you're doing 6,000% in 4 months' time, 5 months, 6 months' time. I don't think you're going to really go like this, right? You're not going, it's an impulse. It's not a corrective wave. So I feel like what's going to happen is we're going to hit 30,000 and then correct sideways for a bit. Consolidate, and then move again. Consolidate, and move again. A proper impulse does that, yeah? So that's what I'm seeing. Yeah, that's pretty much all I wanted to discuss. Anybody have any questions? Wanted to talk about something else? Look at any particular projects? What's up? How are you guys doing? Is there anybody here? Check out DAG. Wesley says check out DAG. All right, let's look at it. Let's jump into... Okay, let's turn log off. And let's add that. Okay, let's see. KuCoin typically has a lot of good data. They tend to add projects early, so I'm going to... Didn't seem like there was too many other options. Okay, this looks like an no, 2020, not that old. Okay, just looking at the daily time frame for this. Let's see. Yeah, definitely large time frame. I need the log scale on, and I'm just gonna check something real quick. I'm gonna check the. Okay, this is a corrective move right here. Okay. Okay. Let's see. This looks to me, I'm trying to figure out. So every time I do analysis, for those of you who are newly subscribed or just kind of joining, I like to go outside in, meaning I like to do a large time frame analysis, get my bearings, kind of see what I'm working with, and then jump down into smaller time frames, right? Just so you have some context. And I think nothing gives context like Elliott wave. Nothing. This to me looks like a leading diagonal. This looks interesting. I've never heard of this project before. But okay, this to me right here is clearly an impulsive move, okay? That's clearly an impulsive move. That looks like a wave 1 impulse, okay? And I'll say why. Because this ensuing correction is super sharp. Super sharp. And actually, if you time it, let's time this. This is how you use all that theory. All that theory. I know some Elliotticians love the sound of their own voice, love to talk about, all the theory that they learned and brag about it. Make videos and content on YouTube about it. This happens, that. Like, none of it's worth a damn if you can't use it to make money in the market, in my estimation, okay? It's a beautiful theory. It's nice. The intellectual exercise is worthy. But at the end of the day, I think we're all trying to make money. And I think the way you apply it really makes or breaks you as a trader and a chartist. Okay, so 72 days for that impulse, okay? And here I'm going to apply the principle of proportionality, the guideline of proportionality. 52 days, okay? 52 days and about, let's say, before, so I'm going to count the pivot. Okay, what does that mean? Actually, let's not count the pivot. Let's just count the actual correction itself. So that was 52 days, right? So 54 days, let's say 54 days. And this was 74 days. It's close to a 1-to-1, okay? It's close to a 1-to-1. Took 74 days, took 54 days. This was a sharp retrace. This is what you typically see in wave 2. A sharp retrace to the 0.5 and 618 of the previous impulse, okay? So here you have a sharp retrace. That's a wave 2 characteristic wave 2 sharp retracement between the 0.5 and the 618, close, okay? So that's my wave 2 correction. What ensues is wave 3. Remember what we saw in the beginning of this live stream, right? In the Elliott Waves Made Simple book, is wave 3 extends to between the 1.618 or the 2 Fibonacci extension of wave 1, or to a minimum of the 1 Fibonacci extension. So let's take the bottom of this purported wave 1 to the top, retracement of wave 2, okay, and what do you see? I see an ending diagonal right here. This is wave 4, and actually, what's this? This is what you would call a truncated wave 5. Okay, that's a thing right here, where wave 5 barely makes it above wave 4. This is a truncated wave 5 to me. So this results in a 1-to-1. So this is 1, and this is 1. This is wave 1. This is wave 2. Sorry. This is wave 1. This is wave 3. This is wave 2. Okay? So when you have that, a truncated, wave 5, truncated wave 5, a wave 3 that only extended to the 1 Fibonacci extension of wave 1, and then a wave 4 that came into the region of wave 2, that is what you call a type of leading diagonal. Okay? That's an impulse. And it usually, and I talked about this in the very beginning of the live stream, there is a Fibonacci ratio for this, right? Let's just look at it really quickly. Because, I don't know, I hate it when, it's kind of annoying to me when people don't really know that I'm pulling a lot of this from years of study. I'm not just making it up. Where are we? Oh, yeah. Here we go. So, there's a lot of theory to back on these prognostications, these projections up. It's not just pulled out of thin air. I'm looking for where he talks about the ratio in a wave 5 extension. Nope. Here we go. It's here somewhere. Let's see. I can find it. Here it is. Okay. Figures 4-4. Okay. This middle figure right here. This 5th wave extension. This is what I think we're dealing with. We had a wave 1, a wave 2, and a wave 3 that extended to the 1 Fibonacci extension of wave 1. They were concerted. This is what you call a leading diagonal. Wave 4 can come and retrace even within the region of wave 2. The only time wave 4 can come into the region of wave 2, leading diagonal. And then what this results in typically is an extended wave 5, where wave 5 extends to 1,618 of waves 1 through 3. Okay, so that's the theory. And you can read more about it. Obviously, I'm just showing you a quick diagram just because, this isn't like a college class or anything like that. But so basically, what you would do to project wave 5 on this, take your Fibonacci extension tool. You make sure you're on the log scale. It doesn't work if you're on the arithmetic scale, right? Look, you can't do shit if you try to, analyze this on the arithmetic scale. It just doesn't make any sense. And a lot of analysts out there don't even know when to use which one. Just pay attention to what you're doing. If you can't faithfully represent price action from, that basically spans a large degree of time and large values on one chart, then you need your logarithmic scale on, okay? And TradingView will automatically calibrate your tools to that logarithmic scale. So I'm claiming that this is the end of my wave 5. I'm basically taking wave 1 through wave 3, retracement of wave 4. My orthodox low is right here. Remember, there's orthodox low, and then there is the nominal low. This is the orthodox low. This is what you measure from, right? This is basically a B wave retracement right here. So that is my wave 4 retracement, that big wick to the downside right there. And so my projection for DAG against USDT would be $62.14, right? Assuming that this indeed is a correct count, okay? And that count would be the following. Wave 1, wave 2, and these are cycle waves, okay? Wave 3, wave 4, wave 5, okay? And so 1,618 of wave 1 through 3, okay? That's 62.14. Now, doing a time analysis, again, Price is great, but time is the other axis. Don't ignore it, right? There's a lot of things you can do with time. Again, it's not like you know exactly when it's going to happen. It just gives you a rough idea as to when to expect it. Because everybody talks about being patient in the market, right? Wait for your opportunities, do this and do that, and don't prematurely sell and blah, 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 blah. How are you supposed to wait when you have no reference point? When you have no idea when even it's possible to hit your targets, right? So this is how, getting good at time analysis helps you be patient, right? If I know I have 4 to 7 months to wait until my targets mature, then I'm not going to start getting antsy after 2 months, right? So going into the time analysis, you basically use your trend-based fib time, right? That tool. And you do the same thing, right? And this is what I didn't talk about. And we can go back into the Bitcoin analysis for a second because I forgot about this. I would do the same thing. Just like Bob Prechter and AJ Frost discussed, you typically see some sort of regularity in channels as well as Fibonacci relationships. So you take your Fibonacci relationship of waves 1 through 3, retracement of wave 4 from this orthodox low, or when it hit on May 12th, okay? And then what I would do is extend it to the 618 or the 1 Fibonacci extension, or even the 1618, okay? And that 1618 right here falls. So there's kind of like some, how do you call it? Some similarity, right? So we're pretty much projecting price to 1618 of 1 through 3. So why not project time to the 1618 of waves 1 through 3? Okay, and that would give you a projection of early May 2023, which is not that far off from our previous projection that Bitcoin would hit sometime in February, right? January or February, right? May, a few months out, right? Sure, maybe. Who knows? That's just a rough estimate. You see what I mean? For an extended wave 5 for DAG. Now, going back into Bitcoin really quickly, just talking about how we could not just use the channel to project wave 3, but also use the same time-based analysis, or using the fib time tool, right? So you would do the same thing. You would project wave 1 with your time, retracement of wave 2 at the orthodox low, and where do you think? So we were timing the 1618 in terms of price, right? But the time it takes could be just the 618. And look, the 618 is awful close to where our channel projection is, okay? So our channel projection is right here in January, but then our fib projection, 618 of the time it took for wave 1 and the retracement of wave 2, says February. Do you see what I mean? Like, there's consistency in this. Like, if you do analysis and you use 3 different ways and they take you to the same conclusions plus or minus a few weeks, it's very likely, it's more likely than not, and it becomes more and more and more likely. And then look at this. Remember, we were talking about wave 4 hitting here. Look at where wave 4 hits in this example on the 1618. Again, that golden ratio comes up over and over and over and over again. I would not be surprised if the bottom of this bear market, right, between 1.7 million and the low of 400,000, and people would be like, oh my God, Bitcoin's going to zero. It's at 400,000, right? That low at 400,000 will have taken, how long will that take? Sorry, Sorry, one second. So from 1.7 million to 400,000, 420 days. So 420 days, a 420-day bear market. So if we go and do hit 1.7 million in 4 to 7 months, expect a long bear market that lasts more than a year. It says 420 days on this model, on this projection, and the low will be around 400K. Okay, and I expect that once we hit 390, 400K, around April of 2024, the next Bitcoin halving, then we shoot up and we hit our next bull run. Okay, do you see how that works? You can use these various tools and really, I'm not making this up. I didn't do this beforehand or anything like that. I didn't even remember to use the time-based fib tool. Do you see? I used it in DAG, then I went back and used it in Bitcoin, and it was close to my channel projection. Do you see what I mean? And then that you have confluence with the fundamental factor of the halving, which is huge. It's integral to the identity of an asset, right? So that's what I'm doing here. So yeah. Anybody else have any other assets they want to look at? Yeah, you're welcome, Sal. I'm happy to share. Wesley, the chart isn't pretty, but it's a solid project. I mean, it's fine. There's nothing wrong with the chart. It looks good to me. A lot of things kind of did that sort of leading diagonal. Litecoin did a leading diagonal where its whole life it's been in a huge, massive leading diagonal. I've shown this before on the channel, but if you go and look at Litecoin, a full chart of Litecoin, which I have here, on a large time frame, you can see it's just as quote-unquote ugly, where it went up and it retraced very, very sharply, wave 2, wave 3 with a concerted wave 3, which is a 1 Fibonacci retrace or extension, except the wave 4 wasn't as steep and ugly as in DAG, okay? But still, this is exactly what you have in DAG, a leading diagonal leading to an extended wave 5 that projects to the 1.618 of waves 1 through 3, right? Let's see. Overbought, downshield, go. What are you talking about, Shaba.exe? What is your long-term count on the BLX from the start? Sal, Mark. I'm going to share that. Wesley, see you soon. Thanks for coming. Sal, here's my long-term analysis on Bitcoin's index chart. I've shared this before, and this is what I was working from. Okay. Here we are. I have us in cycle wave 3. So I don't know if you know anything about Elliott wave theory. This is the largest of the waves. This is like kind of the biggest of the Russian dolls, okay, if you will. And because it's all fractal and you can zoom in and you can still kind of count. So next you go into primary wave, okay, and that's what the red is. So I have cycle wave 3. Primary wave 3, okay, I think we're in primary wave 3, which is this region right here, and then the green is intermediate, which is the lower count, okay, with if you subdivide primary wave 3 into 5, you get your intermediate waves, okay, and I think we're in intermediate wave 3, all right, and within that intermediate wave 3, you can further subdivide. I should move this up. Within that intermediate wave 3, you can further subdivide this wave 3 into 5 waves, which I did, which is the minor count, which is what I'm focusing on now. So I think we're in minor wave. We just finished minor wave 2 of Bitcoin's entire price action. So that's my answer, Sal. Guys, please don't forget to like the stream on your way out or in. If you are getting value, definitely subscribe if you're not subscribed. Yeah, that's pretty much all I got. That was my projection. That's why I was discussing a $1.7 million Bitcoin in 4 to 7 months, okay? I think that it's very likely that we do hit some sort of top in February or March of 2023, okay? And that the ensuing bear market lasts some 420 days, or over a year, okay? And that's why I see it like that. So if that's, there's nothing else, if nobody else has any other questions or any other sort of projects they want me to look at, I'm just going to call it a stream. Guys, I wish you well. Hope you're having a great Tuesday and that you're trading well, you know. Be patient. Don't, especially when you have big trends like this, if this is correct, okay? And it's likely correct, okay? You can look at a number of factors. Like, nothing goes in a straight line and nothing lasts forever, okay? We've literally been in this correction, this wave 2 correction, for 450 odd days, okay? It's not gonna last a million days, okay? So at some point in time, we're going to turn around and change the entire trend of the market. It's up to you to determine when that will be. The charts are saying that this has already happened for me, and I think the day that we started going up for me was July 13th, okay, for my calculations. But that was the actual day the price started going up. But the end of the downtrend for me was May 12th. That was my orthodox low, May 12th, for a lot of these projects, okay? Anyway, you have all of these, you know, you have these charts showing you it's very likely that the time it took for you to go up, right, around 400 days, right, the time it took for you to go down around 400 days, it's likely that it's done. And that you can expect the price, the waves, just like everything. There's a night, it doesn't last forever, it goes back to day. There's a summer, it doesn't last forever, it goes back to winter. There's cycles, and then there's another cycle, and there's another cycle after that, and then there's a bigger cycle. There are bigger cycles, and then bigger cycles, right? But within this smaller cycle, you're going to have an up and down, just like everything else in life, right? It's not going to go down forever. I hope you guys are taking advantage of the fact that it's very likely, very probable that this downtrend and this corrective price action is finished and we're moving up. That is life-changing wealth right there. Life-changing wealth if you can play it right. And I'm not going to tell you or lie to you that I bought everything at the bottom. No, I bought some over here. I bought more over here, right? There's some positions I'm already well into profit in. There's some positions I'm still underwater from. But I'm fine with that because I literally built my position over months. And I put a lot of money, pretty much money, more money, which I could not have done if I just, okay, we're at the bottom, I'm just going to buy everything at once. No, I wouldn't have all that money all at once, right? I literally had to a dollar cost average in, right? When I got some money, some extra money, I put it in, and I built these positions. And some of these are already potentially life-changing positions. So, I mean, you know, patience is huge in trading, but you can't really be patient if you're blind. So this is where good technical analysis comes in. And you don't have to be perfect. You just have to be close, you know? You don't have to get anything perfect. Not the time, not the price, but, you know, you work on it. You give yourself a chance. You get an edge. You rinse and repeat, you're going to make it. So, yeah. Hope that was helpful. Hope that was useful. Guys, like, share, and subscribe. And I will see you guys tomorrow for the daily update. Take care.